What if I told you that a single $10,000 investment could turn into $1.4 million? Sounds impossible, right? Wrong. In 1997, a regular schoolteacher named Anshaiba died at age 101, leaving behind $22 million all made from stock market investments. She started with just $5,000. No insider secrets. No Wall Street connections. Just pure strategy. But here's what the gurus won't tell you. 99% of people fail in the stock market not because they don't have money, but because they don't have the right system. I've personally turned $50,000 into over $2.3 million in 9 years. And today, I'm going to share the exact 5 strategies that separated me from the broke dreamers. These aren't theories, these are battle-tested methods that created real millionaires. So if you're ready to stop gambling and start building real wealth, stay with me for the next 7 minutes. This could be the most valuable video you watch all year. Before we dive in, let me give you a reality check with a recent example. In March 2020, when COVID crashed the market, everyone panicked. The S&P 500 dropped 34% in just 23 days. People were selling everything. But a 28-year-old software engineer named Marcus invested $30,000 during that crash into companies like Amazon, Microsoft, and Shopify. By December 2021, just 21 months later, his portfolio hit $127,000. That's a 323% return while others were running scared. The difference? He followed a system. And that's exactly what we're covering today. Way number 1. Master the power of compound interest, the 8th wonder of the world. Warren Buffett, worth $120 billion, made 99% of his wealth after age 50. Why? Compound interest. Here's the truth nobody tells you. Getting rich in stocks isn't about making money fast, it's about making money consistently and letting time work its magic. The professional formula. Invest $500 monthly at 10% average annual return. After 10 years, $102,000. After 20 years, $380,000. After 30 years, $1.1 million. What you MUST understand? The rule of 72. Divide 70 to buy your return rate to know when your money doubles. At 10% returns, your money doubles every 7.2 years. The real secret. Start now, not tomorrow. Every year you wait costs you tens of thousands. A 25-year-old investing $200 per month will have more at 65 than a 35-year-old investing $400 per month because of those extra 10 years of compounding. Action step: open a brokerage account today. Fidelity, Charles Schwab, or Interactive Brokers. Don't wait for the perfect time. The perfect time was yesterday. The second best time is now. Way number 2. Value investing by dollar bills for 50 cents. This is how Peter Lynch turned $18 million into $14 billion managing Fidelity's Magellan Fund. The core principle: buy quality companies trading below their true value, then wait for the market to correct itself. What you need to learn. 1. Fundamental analysis mastery. PE to price to earnings. Never buy a stock with PE above 30 unless it's high-growth tech. Compare it to industry average. P ratio price to book. Below 3 is generally good value. Debt to equity. Under 0.5 is healthy. Above 2 is danger zone. ROE, return on equity. Above 15% means the company uses shareholder money efficiently. 2. Real example. In 2016, Apple had a P/E of just 10 when the tech average was 25. Shares were $95. Smart investors recognized the iPhone 7 potential. By 2021, Apple hit $182, a 92% gain plus dividends. 3. The Buffett checklist. Does the company have a competitive moat? Brand? Patents? Network effects? Consistent profit growth for 5+ years? Management that owns stock? Skin in the game, easy to understand business model? Pro tip: use free screeners on finviz.com or Yahoo Finance. Filter for PE under 15, ROE above 12%, and positive earnings growth. This takes 10 minutes and gives you golden opportunities. Way number 3. Dividend growth investing. Get paid while you wait. Imagine owning a money printing machine that sends you checks every quarter forever. That's dividend investing. The Millionaire strategy. Coca-Cola has paid dividends for 60 consecutive years. If you invested $10,000 in KO stock in 1990, you'd receive about $5,500 in dividends. Annually by 2023, that's 55% return per year on your original investment, plus your stock value tripled. What professionals know? The dividend aristocrats. Companies that increase dividends for 25+ straight years. These include Johnson & Johnson, Procter & Gamble, 3M, Their wealth-building machine's DRIP strategy dividend reinvestment plan automatically reinvest dividends to buy more shares. This creates compounding on steroids. Example, $100,000 in dividend stocks at 4% yield with 7% dividend, growth rate becomes $743,000 in 20 years through DRIP. Key metrics to check. Dividend yield. To 6% to high might be unsustainable payout ratio. Below 60% company can afford it. 5-year dividend growth rate above 5%. Real power move. Build a portfolio of 15 to 20 dividend aristocrats. This gives you a recession-proof income stream that grows every year, even when stock prices drop. Way number 4. Growth investing ride the rocket ships. This is how Cathie Wood's ARK Innovation ETF gained 157% in 2020. The strategy: find companies in early explosive growth phases before everyone else does. What separates amateurs from pros? The TAM analysis, total addressable market. Tesla in 2015 wasn't just a car company, it was targeting a $2.7 trillion global auto market plus energy storage. That's why it 20x'd. Key indicators for growth stocks: revenue growth 20% plus annually, expanding profit margins, disruptive technology or business model, large addressable market multi-billion, strong competitive advantages. Real example: Netflix in 2012 traded at $8 split adjusted. Smart investors saw streaming would destroy cable. By 2021, it hit $700 and 87x return in 9 years. Critical rules: never invest more than 15% of your portfolio in one growth stock. Use trailing stop losses, sell if it drops 20% from peak. Take profit, sell 25% when a stock doubles. Where to find them? Track emerging trends: AI, renewable energy, biotech, fintech. Use platforms like Seeking Alpha, ARK Invest Research, and follow visionary fund managers. Way #5. Risk management, the skill that separates millionaires from bankruptcy. Here's the brutal truth. It's not about how much you make, it's about how much you don't lose. Warren Buffett's rule number 1. Never lose money. Rule number 2. Never forget rule #1. Professional risk management framework. 1. Portfolio diversification. 40% blue chip dividend stocks. 30% growth stocks. 20% index funds, S&P 500, NASDAQ. 10% speculative opportunities. 2. Position sizing. Never invest more than 5% of your portfolio in a single stock. One bad bet can't destroy you. 3. The 2% rule. Never risk more than 2% of your total portfolio on any single trade. If you have $50,000, risk maximum $1,000 per position. 4. Stop loss discipline. Set automatic sell orders 15 to 20% below purchase price. Emotions destroy wealth, automation protects it. 5. Emotional control. The biggest market crashes created the biggest millionaires. In 2008, while everyone panicked, investors who stayed disciplined and bought quality stocks saw 300 to 500% returns by 2013. Real example: a Reddit user lost $180,000 in 2021 on GameStop because he had nitrogen monoxide exit strategy. Meanwhile, disciplined investors who took 50% profits at $300 and held the rest secured life-changing gains. There you have it, the 5 ways that create real stock market millionaires. Compound interest and starting now. Value investing fundamentals. Dividend growth income streams. Growth stock explosive gains. Bulletproof risk management. Here's your homework. Pick one strategy today. Open that brokerage account. Invest your first $100. Because knowledge without action is just entertainment. The stock market has created more millionaires than any other vehicle in history. The question isn't if you can do it, it's when you'll start. Drop a comment below telling me which strategy you're implementing first. And if this video added value, smash that like button and subscribe, because next week, I'm revealing my exact-to-point $3 million portfolio breakdown. Your future millionaire self will thank you. Let's build wealth together.